Assalamualaikum warahmatullahi wabarakatuh. This presentation is for subject FIN533 Personal Financial Planning. So our title is Insurance Planning and Retirement Planning. I will remember here is the first one is Nuzairi bin Ahmad Hashim. The number 2 is Muhammad Azlan Zakaria and Muhammad Faiz bin Muhammad Muhi and me Ahmad Shariza bin Muhtar. The another 2 is Nur Liana binti Muhammad Noh and the last one is Dayang Sahilah binti Muhammad Hosni. This the enlargement and summary. Individuals should plan for insurance and retirement since it will guarantee their financial needs throughout the post-retirement period and ensure that they are covered in the event of risk. Planning for retirement and insurance, on the other hand, is a personal choice. It takes a purposeful decision on the part of the person to allocate or put money aside for insurance and financial stability. Previous research on the retirement planning has revealed the people in many nations throughout the world have little or no retirement planning, despite the importance of insurance in our life. Furthermore, independent polls in Malaysia demonstrate that the majority of Malaysians are unprepared for retirement, and the majority of them do not take up insurance to mitigate risk due to income allocation. As a result, the purpose of this presentation is to demonstrate the significance of insurance planning, retirement confidence, and readiness. Okay. The summary of this report is to clarify the situation of retirement readiness and confidence, as well as to look at the role of insurance in our life. The finding reveal the goal clarity in important in predicting working people's retirement confidence and how insurance might assist us reduce our financial or investment risk. A little introduction. Almost all want to be able to live comfortably in retirement without having to give up our current way of living. It is evident to retirement planning is not a need, but rather a personal decision in terms of financial planning and management, which is based is part on how a person allocate his or her income for saving, investment, and spending. In general, cumulative saving should be adequate to satisfy financial commitments equal to the two or greater than pre-retirement demands. As a result, all parties concerned must take retirement financial planning seriously in order to ensure financial security to retirees. The path leading to an individual financing objective is thought to be paved with various constraints and risks in insurance planning. The main worry for a financial advisor would be the possible hazard that may get in the way of his client financial goals. These are known as financial hazard, and they are dangerous to everyone, dangers that everyone in the economic world must manage. Financial risks are those that have a potential to result in financial losses if certain circumstances occur. A good example would be medical expenditure incurred as a result of the major sickness, because financial risk and unavoidable. The financial practitioner's responsibility is to detect such risk and put in place safeguards to enable the client achieve his objective despite the dangers. Risk management is the process of dealing with hazard in insurance planning.
What is insurance planning? Insurance planning is a precautionary investment that shelters you from financial loss. As you get older, you may want to consider incorporating such coverage into your financial plan because it can be a deciding factor in how much you spend compared to how much you earn. What is insurance? Insurance is a contract presented by a policy in which an individual or entity receives financial protection or reimbursements against losses from an insurance company. The insurance company does this by charging their clients a premium to create a big pool of money so that anyone who is unfortunate enough to suffer a loss is reimbursed from that pool. This makes payment more affordable for the insured. How does insurance work? When you buy insurance, you make a payment to the firm. This payment is called a premium. In exchange, you are protected from certain risks. The firm agrees to pay you for losses if proof occur. Insurance does not compulsory for everyone, but it is a great buy insurance when you have a lot of financial or investment at risk. There are a few types of insurance. One of it is life insurance. And what is life insurance? Life insurance policy is a contract with an insurance company where you, the payer or insured, will pay a set amount of premium monthly, quarterly, or annually in exchange for a lump sum payment known as a death benefit to beneficiary upon the insured death. Most life insurance nowadays also provide compensation for total permanent disability to protect the insured and his or her family in the event of the loss of ability to generate income. It should be noted that death benefits from all types of life insurance are generally income tax free. There are many types of life insurance policies. It depends on your budget and your needs in the future. Among the life insurance you can consider to purchase are endowment policies. These are protection plus investment policies. Term typically ranges between 10 until 25 years, payable to the remaining on death of policyholder. Typically includes bonuses accumulated also. Maturity benefit will be paid to policyholder on survival at end of term. It is higher premium cost. Investments accumulate profit, which are paid as bonus. People with income to pay high premium others who are looking to protect themselves and multiply their investment are good for using these policies. Another one is unit-linked insurance policies. These are investment plus insurance policies which are unit-linked and participatory in nature. Term ranges between 10 until 20 years. Payable to nominee if policyholder dies while policy is in place. Majority benefit will be paid to policyholder on survival at end of term. Premiums are on the higher side owing to investment costs. Investment accumulated profit paid as bonus. Tax exemptions can also be claimed. It's suitable for people who are looking at a medium-term investment goal to diversify their portfolios. Also suited to those with high income and keen investment sense. Money-back policies. These are protection plus saving policies which are participatory in nature, typically ranges between 5 to 25 years, payable to nominee if policyholder dies while policy is in place. The benefit is exclusive of other payouts. Survival benefit will be paid on maturity of policy. Affordable premiums. Regularly monetary benefits are given to policyholder while the policy is in force. It is amounts not affecting the death benefit. Individuals who are looking to secure their life but wish to earn some money at regular interval. It is ideal for people looking at investment plus protection plans. Whole life policies. These are protection plus saving policies which are participatory in nature. Covers the whole life of a policyholder. Term can be 40 years, payable to nominee if policyholder dies while policy is in place. Maturity benefits are typically paid when the policyholder reaches a certain age, could range between 80 years to 100 years. Generally have higher premiums associated with them. Benefits paid on maturity or death include a bonus component along with the sum assured. People want to protect the interests of their family and is looking to secure the financial future of their loved one irrespective of what happens. Pension or annuity policies. These are traditional policies which are non-participatory in nature. Typically, there are no fixed terms with annuity kicking in post-retirement. Some plans offer permission to return the invested amount in the case of death of policyholder. No maturity benefits. Policyholders are entitled to regular pension for the term specified. Premiums are moderately priced with most policies requiring one-time payment. Regular income source post-retirement are suitable for people who are worried about their retirement life and those who wish to have a regular income source post-retirement, and suited for those looking at higher returns on their investment. And last but not least, term insurance policies. These are the simplest life insurance policies, typically ranges from 5 years to 30 years. Sum assured is payable to the nominee if policyholder dies while the policy is in place. No maturity benefit will be paid on survival. Affordable premium lowers among all policy classes. These plans provide maximum cover at low premiums. One can option for variant of pure term plans which provide maturity benefits. People who are looking to secure the financial interests of their family members without having to pay exorbitant premiums. Individuals looking for short-term protection can option for these plans.
Health insurance. Health insurance is a form of insurance that covers a medical fee that arises due to illness. The payment could be related to cost of medical hospitalization, cost or doctor consultation. Basically, there are a few types of medical insurance benefit you can purchase, which is for maybe for medical card or critical illness insurance. Medical card is created by insurance company with the purpose of enabling contribution to obtain medical service or the emergency and general hospital design of the insurance. Type of medical service depend on the wide type of coverage with the policy chosen by the contributor. With using the medical card, you do not need to pay cash as payment when you admit at hospital as long as the insurance premium is still running for the benefit. Insurance fund offers different medical cover plans such as doctor coverage, doctor hospital allowance, and so on. The type of coverage will determine the premium, which is the price to be paid every month. The insurance company will also issue a medical card for the selected medical policy to each competitor, which is the turn can be used to receive company treatment service. Interesting. Hospital is now much easy. Just need to show the medical card as long as the service you need the point of the policy plan without waiting hours before receive the treatment. Move on to critical illness insurance. It's a policy to particular dangerous illness that may recommend continue hospitalization or advanced treatment method. For example, the most common critical illness coverage is just as insurance policy of cancer and stroke with the FIN533. This is an insurance plan that offers financial coverage for all medical expenses and costs into once you are detected with a critical illness. Nothing like life insurance and medical card. The critical illness insurance pay you off in lump sum option claim with the purpose of you can focus at your treatment and recovery. The insurance can be the money for any purpose and is not limited to medical method only. Property insurance is a term of a series of policies that provide either liability coverage or property owner or property protection coverage. Property insurance offers financial repayment to the owner or rental in the event there is a theft or damage at the person other than the owner or rental or if that individual is hurt of the property. It's a combination of the several types of property insurance policies such as tenanted, annual, homeowner, flood, or earthquake insurance. The policy is usually covered by the homeowner, or tenant policy because the real estate has a very high expenses asset value. This is usually covered by purchasing an additional policy called its rider. In the event for any claim, the policyholder will either be reversion of for the actual value of the damage suffered or the cost involved in resolve the issue. Buy a home such a high and expensive investing, just like other valuable. You definitely want to protect it. Some table insurance among the home insurance you can consider to purchase are fire policy. Fire policy is the simple policy that protect your residences. This type of the policy simply cover the value of the building itself and not the household if anything happen of loss due to damage caused of fire or lightning. The FIN policy can be extended to include an adding range of protection such as storm damage, flooding, and sedimentation. In summary, on the short of the undesirable event that could cause in a loss of or damage to property value can be protected by the policy. Homeowner policy. This policy gives coverage for your property in addition to standard fire policy. It provides security in the physical structure of your property, such as walls, roof, building fitness, and the interior structure and the other. The policy also covers loss caused by food, fire, broken piping, bad weather, and various other adverse events that can have an impact on your city. 3. Household policy. Household policy is intended to offer additional protection to object and application in your house. The policy ensures that term and equipment in your home is damaged can be claimed in the event of an insurable event such as damage due to fire, lightning, from broken pipe, and other. In the case of fatal injury, the policy may also give you additional protection of protection individual homeowner. Last is the property for car insurance. Generally, in Malaysia, there is a three forms of car insurance that you can select from the most basic type of insurance to those that provide full coverage against numerous variety of their liability. First, third-party insurance. Third-party insurance is the most common insurance you can have. This insurance can cover to the third party in any accident. This includes the driver or passenger and also the car involved in the car accident with you. Meaning, if you are involved in an accident, the policy will benefit you to cover the cost of repairing the damage to the third-party car or any treatment cost requirement by the party. Second, third-party insurance, fire and theft. The insurance policy is similar with the third-party insurance policy. This insurance offers protection for your own personal car. It will cover all damage, injured or die, and loss of property that due to your car. Last but not least, comprehensive insurance. The type of comprehensive coverage is the most full coverage insurance among the three types of insurance. This insurance not just covers third-party liability, insurance theft, and fire your car, but also cover all damage happen to your car in the event of the insurance. The damage or loss of property is this including injured tire and lamp, L-I-M-E, lamp. Injured caused by you and your passenger are all also protected.
Assalamualaikum, I'm Nuriana binti Muhammad Noor. So I'm gonna present about the importance of retirement planning. So here I got 4 points. The first one is higher medical costs. Second one is we cannot work forever. The third one is we always have money to save for retirement. And the last one is best time to fulfill lifelong aspiration. Okay, the first point, higher medical costs. Okay, we are very health conscious person who watch that they eat and is regular at exercising as well. In the headedness of health, we might assume that health-wise we are bound to always remain fit. That unfortunately is not the case. Even the best or machine develop enough fault with the wear and tears of a year of use. And while a good updated health insurance policy can cover some costs, no health insurance policy will cover 100% costs. Second point is we cannot work forever. Okay, we might think that we used to a busy work life. We will get bored and do not want to stop working because the thought has crossed our mind several times. Okay, that still is no excuse to not plan healthier finance for retirement. Also, with such a competitive and youthful workforce, other people are born to be on the end of the priority list experience, notwithstanding. Okay, next, we always have money to save for retirement. Okay, why? Because if we're able to make a saving money to help plan for our retirement, a priority, so we will be able to see what we do indeed have some extra fund to be a pleasant future, no matter how. Saving money is a challenge for some more than others, but it's always much more of a mind game than a numbers game. As long as the end result of having a comfortable retirement is of high importance to us, we will find a way to save to make it happen. Okay, for the last point is best time to fulfill lifelong aspiration. Okay, why? Because retirement is the time that to us to fulfill all the things we might have wish we had time or money. And yeah, for be it travel, contributing to a favorite social cause, or make a thing that we love. The conclusion is we are responsible for deciding how to invest our money. While employer may offer retirement plan, they generally leave the investment option is up to us. Okay, remember it is our money and our future, so we want to make the best choice possible. Saving for retirement is long-term investing. Okay, establish a retirement plan, avoiding investment that seem too good to be true, and understanding your potential risks are 3 keys to building your financial independence later in life. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Faiz. I will continue with the current issue in Malaysia. Okay, Malaysia's population will be aging in less than 8 years by 2030. Many concerns and challenges will develop such as a result of this demographic shift. The current scenario demonstrates that Malaysians are unprepared to confront the difficulties that lie ahead. The retirees wanted to maintain their lifestyle at par or even better than it was before they retired, and the government had to accommodate an expanding requirement of the citizens' well-being. However, there are other concerns that Malaysians must solve in order to live a sustainable lifestyle in retirement. Okay, for the issue retirement planning in Malaysia, there are 4 issues that our team found. The first one is low salary among EPF members leads to lower saving. The second one is many Malaysians do not have enough money to retire. The third one is government expenditure will increase significantly. The fourth one is Malaysia has the highest household debt to income ratio in the world. Okay, for the first one, low salary among EPF members lead to lower saving. As we all know, this one is the figure one that show Malaysian labor income from 2015 and 2020. However, there are significant increase in consumption. The consumption has increased basically due to the inflation effect, increase in foreign currency rate, increase of cost of living, desire to assist adult children or grandchildren financially, the unpredictable economy forces, increase of healthcare costs, the extended life expectancy, and retaining funds of lifetime gift. All these are the factors that increase the need for more retirement fund in the future. Okay, for the second one, many Malaysians do not have enough money to retire. The Melbourne Mercer Global Pension Index continues to bring together government, business, and economics to give significant insight into global pension system. Malaysia Retirement and Pension Index was scored C, 55.7%, in the Melbourne Mercer Global Pension Index 2016, placing second worst out of all categories of A, B+, B, C+, C, and D. The index compared each country retirement income system against more than 40 factors using 3 sub-elements: adequacy, sustainability, and integrity. This explains the Malaysian income system, which has some positive aspects but also has significant hazard or deficiencies that must be addressed. Its efficiency and long-term viability may be called into doubt if it is not improved. According to this conclusion, many Malaysians do not have enough money to retire, and extra attention is needed to enhance people's financial preparation for retirement in the future. Okay, for the third one, I will explain about the demographic dividend. Aging population will change the demographic population. Working age population will drop and aging population will increase. This indicates lower productivity, shortage in the labor market, elderly has limited job and work scope, and eventually lower income to the nation. Malaysia productivity as a whole will decrease and government expenditure will increase to support the needs of the citizens, well-being, especially in 3 main sectors such as healthcare, pension, expenditure, and social protection. Okay, for the last one is Malaysia, as we can see, Malaysia have the highest household debt among Singapore, USA, Korea, Thailand, and Indonesia, which is Malaysia has 140% household debt. On top of this situation, Malaysia was ranked first in the world to have the highest household debt to income ratio. Malaysia household debt to income ratio is stand high 140 ratio 100. Every 100 income there are 140 debt. The report mentioned that 7 countries have household debt that may be unsustainable are the Indonesia, Thailand, Korea, USA, Singapore, and Malaysia is on the top of the list. High household debt can harm the economy in years. Since 2008, financial crisis, a great deal of research has been conducted to establish the link between household debt, financial crisis, and the severity of recession. The rise and fall of household debt affect the magnitude of a recession. Then after the cases hit and credit dried up, the deadline in consumption was especially sharp as household could no longer borrow and had to make payments on previous debt. Often for home which is their equity has been wiped out.
Retirement planning and statistic information. This research is done by University Science Islam Malaysia, as known as USIM. This research is to determine the awareness among working individuals in Malaysia to do extra saving for older life. and how working people saving for retirement. This research is done at various ages, educational levels, and income levels. This research also involve the younger generation since they think that retirement planning is a burden. This is the result from the research. We have many types of variables, which is include gender, marital status, age, education level, occupation, and the last one is gross monthly income. So we will go through one by one. For gender, we have male and female. For marital status, we have single, married, and others. For the age, we have 25 years and below, 26 until 35, 36 until 45, 46 until 55, and the last one is 56 years and above. For education level, we have SPM, and the second one we have SDPM or matriculation or diploma. The third one we have bachelor degree or professional, and then we have master degree, and the last one we have PhD or doctorate. For occupation, we have types of government, private, self-employed, non-employed, and others. And for the last category, we have gross monthly income, which is we have category for 2,000 and below, 2,001 until 5,000, 5,001 until 10,000. As we can see from this result, we can see for the gender first, female have the highest percentage, which is 68.2%. For the marital status, we can see the highest result for the married, which is 64.2%. For the age category, the highest percentage is for 25 years and below. For education level, the highest category is for bachelor's degree or professional. For occupation, government have the highest percentage, which is 49.3%. And the last one, the highest percentage is for gross monthly income is 5,001 ringgit to 10,000 ringgit. The results, the respondent with a higher income level save more than those with a slightly lower income level. This is significant since many people today are struggling to pay off debts such as student loans and personal loans. Majority of respondents agree that retirement does not make them feel useless, and many are eagerly anticipating their retirement days. Particularly young people should be more cautious and proactive when it comes to retirement planning. The next one is research by International Islamic University Malaysia, as known as IIUM. This research is carry out a study to investigate the reasons that influence individuals to plan retirement. People have comparable basic needs. The reasons for retiring are almost universal. There are numerous research and literatures that look into the socio-economic elements that influence retirement, such as retirement age, income, and gender. So here the result for the research, which is the result of retirement. For the age, we have 41%, house income 27%, family 25%, and health 7%. The result for the research that have been done by IIUM is age was the most common reason for people planning to retire, which is 37%, followed by household income 24%, and family 22%, with only a small fraction citing health as the primary reason for retiring. The term age refers to the employee retirement age, which is specific in their employment contract. According to the Journal of Occupational Environmental Medicine, poor health is the most common reason for workers to decide to retire early, followed by high work pressure and low job satisfaction. While many people retiring owing to illness, the rising cost of medical care is source of anxiety. We conclude from the outcomes of our study that while employees retire for a variety of reasons, age is the most important issue.